Welcome to the August 6, 2017 Advance Report for McGowanGroup Asset Management clients. Of course, the big story of the week, Dow 22,000 for the first time in history. The round number was almost reached at the beginning of the week, but they really love in New York to celebrate the round numbers. And here it is. Justification for this rally? Too far, too fast. Trump administration, which most people thought it would crash, but no, it hasn't. Part of the reason underlying, we did this research last week, based on the S&P earnings, corporate America, the major companies, a 25% increase in corporate profits has been accomplished in less than 2 years. That's extraordinary. Add the impact of potential tax reform, and those after-tax earnings go even higher. That's part of what's fueling the current rally. The other part is, if you look at both the Dow and the S&P, they're essentially 20 times what we estimate as current earnings, about a 5% earnings yield, compared with a 30-year Treasury this week, which closed at 2.8, and 5 is better than 2.8. Here we go. This is crude oil. Now, major story on crude oil, the rally to above $50, at least by midweek, had failed. You can see the tops of these in a downtrend, and the lower lows here. Is the next lower low below 40? That's one of the key questions. Now, even though oil was stable in the 49s as we approached the end of the week, they slammed Dallas-based Pioneer Natural Resources and Range Resources. Pioneer actually slammed 2 days in a row. It had been over 200 at one point, falling this week to near 130. That huge decrease, 10% for both companies on Thursday, that was absolutely a pounding. Mainly Goldman Sachs, if I had to attribute it to a report, they said they're going to need $55 for the exploration companies to repair their balance sheet. And it appears we're having some trouble with oil rallying back over 50. And you could make the case for below 40 just from this trend line. This is the dollar. And we're going to get to dollar and oil next. But the dollar trend, wow. This was 104, and the news reports at this point, it really impacted multinational, big company, international earnings, right? Because the dollar was, in essence, too strong for them to make a competitive profit. Well, that's been fixed, right? With the dollar index falling below 93 this week. What does it mean? Well, it actually means that the U.S. is gaining export advantage. Not necessarily a bad thing, and based on oil, not necessarily inflationary. All right, here's crude versus the dollar. And Alex Tolene, our head of trading, pointed this out at one point. Notice this very direct correlation with the dollar and with oil. And that's something that, as we look for what's going to happen in the future, the oil prices have been low enough, and energy deflation is a big enough factor that a falling dollar isn't necessarily inflationary. Main message for that. Now, here we're looking at copper. If you're worried about the health of the global economy, copper's always been a very good benchmark for that. A very good way to say, hey, what's the wind reading on the global economy? And it's strong. Copper hitting nearly 290. This is a rally of nearly 50% in copper prices, and that's happened in a relatively short period of time since about the third quarter of 2016. Bam! That tells you that there's plenty of demand for copper at this point. So if you're worried about the global economy, that may be somewhat premature. I'm Spencer McGowan, President, McGowanGroup Asset Management. Thank you for joining us for this week's Advance Report, and we look forward to joining us next week with updates right here, YouTube McGowan Group.